Hey, welcome to the show. What Paul and I want to do today is we brought on a handful of clients here who've all got their own personal stories about infinite banking, about why they got interested in IBC in the first place, and they're willing to share a story with us on what they've used infinite banking for in their lives to either improve what they're already doing or do something new. So I know a lot of these stories, Paul. You know a lot of these stories that we've heard firsthand, so they're pretty exciting, and we just love sharing them with people. So if anybody's got questions, throw them in the chat as we go along. If you got questions for the person speaking, throw it in the chat, and I think they'll be happy to answer. So we're just going to go through, one by one and bring them onto the platform, onto the stage here, and grill them for a little bit. Paul, you got anything to add there?
I'll just add this, that, the infinite banking concept is something that people catch in different ways, right? They have this light bulb moment, and it might be different. What appealed to Dave might have been different. That what got me going and interested in IBC might be different from Langdon or Rebecca or David or whoever, right? So just keep that in mind, that this concept is caught, not taught, right? It's going to, different aspects of IBC and the mindset behind it are going to appeal to people in different ways. And that's totally fine as long as you get there.
All right. Well, let's bring up our first client and guest. Travis, are you able to come on live?
Okay.
Hey.
Travis, good morning. Travis, so tell us who you are, what you do, really what got you interested in infinite banking in the first place, and then give us one story how you've used it to enhance what you're already doing in your life or do something new and different. So we'll try to keep this at 5 minutes or less.
I'm a professional pilot, and I started IBC because I met Dave probably 5 years ago or so. So my 10-year-old was like 5 or 6, and got introduced to that concept from a shared pilot group we were both in. And so that's kind of how I got here today. But I'm a professional pilot. So I remember being in school, learning one of the jets I fly now, thinking, I need a better plan for where I'm going to put this money I have that's coming in. And that led down this whole rabbit hole that is where we're at today with IBC.
What do you mean better plan? What was wrong with the plan you had?
Plan I had was no plan, first of all. The plan I had was just, put money in a 401k, put money in an IRA. I didn't really have that's just what you do. Everyone does that. That's not a plan. That's just what everyone does automatically because you don't have a plan. That's the backup because there's no plan.
De facto plan. Yeah.
And I want to have a level of say over what I do with the value I'm building. And keep in mind, I'd already been involved in some real estate investing prior to this. So I already had this mindset that I want to have a say in the level of control over this. There's things I want to accomplish and do. And I didn't want to just stick it in a 401k and have a money manager manage it for 1 or 2%. So,
okay. Fair enough. So how have you used, how has implementing infinite banking in your life changed anything you've done or brought on new opportunities?
I'm an inherent saver. So it's always been a thing for me, but it's not just when I say infinite banking, I'm talking about the thought process, not just I have a whole life policy, but the idea also that I have a whole life policy and I can look at the debt like I owe this in my whole life policy. I don't know. That's makes me want to save even more. And I think in terms of how do I pull value out of this thing, that feeds the system back into the system and feeds the thing, right? Because the concept, if I think in terms of banking and funneling and building my banking business, you guys say it on every podcast episode, you're in 2 businesses at once, right? I want to, whatever I'm doing in my primary business, for me, it's being a pilot, and there's some other things that I do. Secondary business being banking. Whatever I do, I want to feed that system. So I tend to make decisions now based on what is going to sustainably and successfully feed my underlying business that's underlying to anything else that I do, which is the banking business. And so I kind of tend to make more anchored decisions based on how is this going to affect my other business, AKA the banking business. And so for me, I tend to look for opportunities that are, you're not going to see on a Facebook ad, or that are, not what the rest of the public is doing. I look for opportunities that are more network and relation based, things that I can have some level of knowledge and control in, and whatnot. So,
Okay. And we had you on an episode, actually 2 episodes a little bit ago, and we talked about really you using your policies to create opportunities for yourself to generate more income that repays your policies quicker. And you can just recycle that money over and over and over, right? That's the whole infinite part of infinite banking, is being able to use the same dollars over and over and over and never lose the compounding effect of them while you're using them. Right. So I'd encourage people to go back and listen to those episodes. And I think we need to bring you back on probably, for a follow-up episode.
yeah, that'd be a lot of fun. I've definitely, I say I didn't have a plan. I have a plan now. I have a system, right? And it's, and the goal again of that is to feed the banking system. And so, for me, a lot of that includes notes and stacking debt, paper, private lending, and whatnot, in a way that feeds the system. And then, so I have this idea. I have this vision in my head of how do I get my policies self-perpetuating. This idea of this perpetual motion machine. And so in my head, I have this picture of my policies and my banking system being this perpetual motion machine. And, the system that I have in place with, purchasing notes and what I do, usually I'm not participating in things that have a higher level of risk, because you can't have risk if you're building something that's going to continue to be perpetual. And so I tend to more things that are lower risk, that I know I can build sustainably into a system and into the plan. So,
yeah, I like that, man. I feel like the longer I've been doing this, the less risk I'm willing to accept in in any financial opportunities.
Yeah, we've talked about that, right? Is you tend to get more, I don't know, more conservative or just more discerning and less interested in things that might have interested you 6 years ago. Like 6 years ago, real estate syndication was like the hotness. You couldn't walk down the street or get onto a webinar without walking into one of these people. God bless them, good or bad. But, there was a lot of bad ones out there. And
anybody could do it 6 years ago when interest rates were nothing.
Right. Everyone was a hero. Like, oh, look at this. Like,
it's the people doing it now who are still in that business who are really the people that have proven their mettle.
Correct. The dominoes have all fallen. I would say most of the turds are gone. The tire kickers that were just.
It's a little harder now than it was.
It is.
To do a syndication.
No question. Yeah, absolutely.
Yeah.
Right.
And I think too that there's an indirect value that gets created that we don't really talk about that much in the IBC
Hey, bring your phone back up to you.
Oh, I'm sorry. I forgot.
It's even better.
So weird. There's this whole indirect value, I think, that we don't discuss much that happens in the IBC community. As you were talking about, we follow the herds and go into syndications and this and that. Something that's occurred in my IBC journey is it's not even just the concept and the tool and the strategy that gets implemented. It's also the community and the networks that I've built. I've met people on this call even that have shaped and impact how I think and the decisions that I make for the better. And I think we maybe don't discuss enough. I've made a lot of friends in the IBC community, and the people in the IBC community generally are thinking more long-term. They're not following the herds. They're thinking more about how is this going to affect my grandkids? And so they think the way that I want to think. And so I want to listen more to these people and adopt some of their thought processes and strategies. You just end up building friendships and you learn from those people. And I think that's something that's a high value for me. That's an indirect value of participating in IBC.
Yeah, that's great, man. I feel like most of my friends now come from this world. So the people
Yeah.
I spend the most time with now are from this world. And, back to that conversation about taking less risk, the longer you're doing this, I think it's a matter of you're thinking more like a banker. When you start
Man,
thinking
you
like a
stole it.
banker.
I was going to say that.
Okay. Yes. Well, I mean,
Never mind, everybody.
great minds think alike. But you stop thinking like a consumer, like the typical person out there trying to hit a grand slam with some big risk investment. And you start thinking like a banker and start saying, well, I'm fine batting and hitting singles as long as there's no risk, or there's very, very, very little risk, because you go to the Hall of Fame hitting singles all day long.
Unless you're Pete Rose.
Well, see, bankers don't bet
singles.
You don't bet on games.
They don't bet. For sure.
Yeah. Right. So, you don't take risk, or take very little.
Yeah.
Awesome.
You think like a banker, and you think about what a bank's bread and butter is. It's the notes, it's, car loans, right? That they do tons of that. And there's a piece of collateral. They don't want it necessarily, right? They don't want the car. They don't want someone's house either. But there's collateral there, right? So I think, when you did the syndication 6 years ago, there wasn't any collateral. It was just...
Well, and I think that banks, like actual banks in the system, in the economic system, they have certain protections in place that are federal and whatnot. I mean, they have a business plan, and they're backed up by the Fed. And, there's certain protection in place that maybe you and I don't have here as individuals practicing privatized banking. But that doesn't mean that there aren't ways and things you can do out there to create your own system of protections and your own vetting process for the things that you get into.
Yeah, you get
we
to
can
make
still
the rules.
create that protection ourselves.
Yeah. Yep.
So.
And you get to make the rules when you're in that position. As Paul and I have seen many, many times, when you play the banker, you get to make the rules, and people take it or leave it. It is what it is. I don't need every opportunity that comes along. Well, hey, I wanted to get another guest on here. Thanks, Travis. Hey guys, David here. Hey, thanks for listening to me and Paul talk about all things infinite banking. I just want to drop a quick note to tell you about a second podcast I've started. It's called The David Beffert Show. My new show will bring you inside the minds of successful entrepreneurs, financial experts, and real leaders who've earned their stars and scars, and will share their lessons learned and the framework they use to produce real results. And you're not going to want to miss this, because I'll be asking these expert questions that nobody else is asking. You can find The David Beffert Show on the exact same platform you're listening to right now. Thanks for checking it out. Now back to the show.
Yeah, thanks for having me on, guys.
Always good to have you on, man. We'll have you back. I know Brian is on here. So Brian, are you able to jump on live? All right, Brian, welcome.
Hey, how we doing?
Doing well, man. You slept okay? You got a newborn at home, a 2-month-old, so congratulations.
Yeah, we talked yesterday. She's been giving us 9 hours, thank goodness. But now I think she just woke up again, but we're good.
Yeah, that's great, man. Well, so speaking of real estate investors, so Brian, you and I met, several years ago, through another real estate investor in the Twin Cities here, who I did some business with when I was doing that. But why don't you tell us who you are, what you do, and what attracted you to this concept in the first place?
Yeah. So when I met you, Dave, I was a teacher, actually. So my whole goal at that time was to get out of teaching and find a way to basically replace my $40,000 a year income. So my wife and I were buying rentals. We were buying duplexes, living in one half, renting out the other. So that was kind of my first introduction to mainly like personal finance, financial independence. Then our mutual friend there connected us, and what kind of sold me on it was he was like, this is what the wealthy people do, is they create these systems to kind of pass on their legacy to their family moving forward. So right away I was like, okay, this is someone that I trust who's kind of telling me that I should do this. So I dug into it, we got connected, and just kind of went from there. But the way that we're really using it right now is kind of twofold. I'm now a real estate agent. I just manage our properties as well. So within our business, the big thing we just did this last year was purchase a vehicle. But within that, using IBC, I went out and it's a business loan, right? So if I went to the bank, they said it was 11% loan to get this $45,000 F-150 because I have to have the nice one. I'm a real estate agent. So when I was looking at that, I said that's pretty high. I don't want this payment that I have to make. That's $1,100 a month because I also didn't want to put cash into it. So instead I looked at, hey, I have this policy here. I can buy it with the policy and pay it off through the business whenever I want. On top of that, we also were able to do like within the business, the 100% bonus depreciation and things like that within the vehicle. So we actually got like $20,000 back as well, tax-wise. So not only did IBC help us purchase this vehicle, it also allowed us to get a major tax savings as well. So that was the thing we recently did this last year. A lot of people in this space that I'm seeing, and I'm getting into it more too, is working with flippers. So doing the private lending side on this. Basically, if you know what hard money lending is, I'm able to do that with our policy as well. There's a couple flippers here in the cities that I know, like, and trust that they do a really good job. I don't like flipping myself. I don't want to deal with contractors. I don't want to have to be going into a lot of these homes pre-flip. They can be pretty rough. There's a reason they're getting a discount. So if somebody else is good at that and I have the money, I'm happy to give that at a 10 to 12% interest rate plus some points. And doing that within the policy makes a ton of sense to help grow that. So that's kind of how we've used it, both with business and within real estate.
Yeah, I love that, man. And I'm with you. I did not enjoy flipping. I had a wonderful contractor. He was great, and I still didn't enjoy it. And in fact, my contractor is a client and uses IBC in his own life now.
Is he a contractor in the cities?
He is. I'll introduce you because he's great.
Perfect.
Fair and honest. So I will introduce you.
It's rare.
Yep. I'm willing to pay extra for that.
Well, so me too. But it turned out he was competitive too.
Mm-hmm.
Yeah, that's great. So you've used it for multiple different things.
Mm-hmm.
I mean, it's just, and the fact that you explored bank financing to go get that truck, even though you had your policy, is fine. Like, use all means that you have, every resource available, and then you can compare them. And in that case, you found, well, it doesn't make any sense to go get bank financing when I could access, a loan from the insurance company for half that rate.
Yep.
And have control.
And the only thing I missed out on, according to the CPAs, is I couldn't write off the interest, which totally fine. That's not a problem.
Yeah.
You're earning interest at the same time.
Mm-hmm.
So
I've talked to people, and I don't do this and I don't promote this, but I've talked to people who have worked out a system where they're writing off the interest that they pay the insurance company for business expenses. So I can put you in touch with somebody to talk to if you want to explore that. Again, I can't vouch for it. I never did it, but it's worth looking into.
Yep. Nope. You're like me. I'm not a CPA. I'm not an attorney, but here's what I did. So
yeah. Yep. Awesome, man. Well, and now we're looking at, you just had a new baby, little daughter, and looking at setting her up here to create something for herself, which is awesome. It's that perpetual legacy mindset that I think our mutual friend Joe shared with you, and then you seem to be implementing in your own life. So
yeah, so it's long term, and kind of like Travis had just talked about here, is you find yourself surrounding with people that have that same mindset. Again, I worked as a teacher. Teachers, in my experience, are some of the best people, shirt off their back for you. Most of them, having a financial conversation with them is not great. Being around people that think the same way, like in the IBC community, in the investing community. So starting out with real estate looking long term, everybody on here is also looking long term. And that's where I think people get caught up is, I can buy this fancy truck, I can buy this fancy house right away. That delayed gratification is huge. So just building these policies is a form of delayed gratification, in my opinion.
That is some Nelson Nash right there, man. That's very good.
Well said.
Yep.
All right. Thanks, buddy. Appreciate it, Brian.
Thank you.
All right. You enjoy your weekend, and I'm glad you and Abby are getting some sleep, man. Hey, everybody. David here. I just want to take a few seconds and introduce you to a community that I'm a co-founder of and I've been a part of for 6 years now. Many of you listening are already members and you know what I'm talking about. I want to introduce you to CoSpark. Real financial strength comes from owning the structures that everybody else pays into. CoSpark is a member-owned commonwealth, a community where your participation builds towards real ownership stake in businesses and assets that are acquired and in capital. Look, I'm a member because I believe in it, but dive in for yourself and check it out. Go to cospark.us. That's COSPARK.us. Now back to the show. While we're waiting on that, if anybody wants to jump on, we've got a school community. So I don't know if everybody's seen that. I think we can drop the link in the
It's in there.
chat. The link is in there.
Yep.
It'll be in the show notes today for this one if you're listening to the podcast. And we got a lot of conversation going on there. We just opened it up and we have over 100 people there. And most people are doing IBC in their lives. Some people are just interested in it and learning about it and asking honest questions. So it's great because you guys join this community and you get feedback from other people who are actually using it, who are not life insurance producers like me and Paul. So you can hear it from, directly from people who have no skin in the game and, no agenda. We've all got agendas, right, Paul?
I don't know. I mean, I'm going to practice IBC regardless of what other people are doing.
Okay,
Hunter.
go ahead.
Yeah.
Bring up Hunter. Yeah, I mean, I was practicing for 9 years before I started teaching people about it. So yeah, absolutely.
But I've even had clients do like test policy loans, right? Where they log in and then I just wanted to see if it worked, Paul. And I see like $100 policy loan pop up and they're like, yeah, I got direct deposit. It really worked. I was like, yeah.
Yeah,
It
exactly.
really does work. It's
just as advertised. Hey, Hunter, welcome, man. Why don't you tell us who you are, what you do, and what turned you on to IBC?
Yeah. So, name's Hunter, live in Colorado Springs. Been interested in IBC for a while now. I'm happy to ramble all about my beginnings of IBC, but I thought I would tell a pithy story that occurred recently.
Go for it.
So my wife is a pharmacist and in the process accrued like $250,000 worth of debt. Paid it off super aggressively through the Public Service Loan Forgiveness Program. So that was great on her for not just trying to float that forever. So when we got married, she had like $50,000 left. And so we moved to one income. We saved that up. We socked away her salary, saved it up, had enough to pay it off. And then we sat back and we were like, well, okay, should we do that or should we buy a cash flowing asset? And so we were like, okay, well, let's do that. That'll pay for the student loan minimum payment. So we did that. We stuck that in as one of our first PUA deposits on a IBC policy. Took the loan, bought a cash flowing investment, and then paid the minimum for the last couple of years on the student loan. So fast forward to a couple months ago, we got news that they were going to increase the minimums, get rid of the base plan, and that was going to put us into a cash flow conundrum. And so we decided, okay, well, let's take a look at the Roth, and we'll pull out the contributions in the equivalent amount to pay off the student loan, and we'll shove that into the IBC policy and then pay off the loan. I had listened to one of this Wealth Warehouse podcasts about student loans, got a referral, and was able to get our payment, or excuse me, my wife's payment down to $0 a month. So then now we're sitting with a bunch of money in our IBC policy, ready to go.
Wow.
It's kind of funny because, we got a lot of pushback from Vanguard when we did this. And I thought that was funny because it's pretty traditional. Anytime that, it's pretty good investing advice. Like once you earn your principal back in an investment, pull that out and redeploy it, but not for 401ks, got to keep it in there. I was like, okay, yeah. So we definitely made our nut back, pulled it out, reinvested it. So I thought that was a fun story.
Man, that's great. That's like so many different layers. but it was all you thinking like a banker, like, hey, instead of taking this cash and putting it towards that, let's take this cash, buy an asset, let the asset pay for it.
That's right. And so we're about to do that same thing. So that same money is going to go in and probably buy another rental property.
Yeah. It's such a different way to think. If you talk to a Dave Ramseyite about, hey, make the minimum payment on whatever the loan is, student loan, car loan, mortgage, whatever, they'll look at you like, oh, you're so stupid. Like, that's the stupidest thing. Oh, you're going to put the difference in a whole life insurance contract? Oh my God, you're so stupid.
That's
My
fun.
goodness.
So I ended up, the Vanguard guy was really trying to push back on all that. And my wife kind of told him like what we were going to do. And so then I hopped on the phone and I talked to him for almost an hour. And by the end of the conversation, he was like asking legit interested questions about it versus just trying to show that I was a dummy. So I thought that was pretty fun.
That's so cool. That reminds me, I was opening accounts at a new bank and I ended up talking to the bank president. We just sat down in a room and he asked me what I did and I talked to him and there's a whiteboard there and I got up and I explained infinite banking on the whiteboard. And he was kind of like, he was perplexed and a little blown away. He's like, I didn't know you could do that. This is a bank president, right? Which just goes to show you, people, it's caught, not taught. Like people aren't exposed to this and very few people know about it and they write it off until they dive in and take a look at it. But hey, Hunter, you also mentioned the loan tutor that I guess we mentioned on the podcast. So yeah, if anybody wants information on that, and that's a great success story. If you got federal student loans, $30,000, $40,000 or more, and you want to look at a program, a federal program that will help you reduce or even eliminate those payments, you got to be prepared for a tax bill down the road on what you save. So you need to funnel that money somewhere else, and putting that into a policy is a great place to. Don't spend it. It's a great place to capture it. You were going to spend it anyway, capture it here, and then you got the money to pay off that bill when it comes due. But that's what a great program to jump into. I'm glad to hear that success story.
Yeah, we were blown away by the results of that, honestly, going from a potential like $350 a month. I mean, I think there's a lot more bigger success stories that they can tell, but ours was pretty simple. We went from $350 a month down to zero. So which is pretty amazing.
Yep. David, kind of, this is totally off topic, but it kind of reminds me of there's tax code for business owners as well, of a closely held business, with say 20 employees, where they can do this basically the same thing, except on a much larger scale, but also, defer taxes down the road, but reduce their tax burden today, year by year by year by, in some businesses, 6 figures per year. So it's similar, just it's interesting. And I guess people don't know what they don't know. There's programs out there and you just have to get connected to the right people. And starting at the IBC community is what I have found is IBC people, whether they're clientele or agents or whatever, they just seem to know things that other people just don't.
I think they're open to it, right? I think you kind of adapt your thinking. And when you first start talking to people about these kind of concepts, they're very resistant, right? They're like, oh, it's not a well-trodden path. That's not what, my financial advisor says. But once you break through that kind of barrier, your mind is opened to other possibilities.
Yep. Once you pull that curtain back, you can't unsee what you've seen.
All right. Well, thank you guys.
All right. Thanks, Hunter.
Thanks, man.
All right. Well, David, I don't know if we have anybody else who wants to jump in and share a story, but we're about at the top of the hour, so we were planning to wrap this up anyway. Well, let's go through the chat and see if there's anything. If anybody's not paying attention to the chat, jump in there. There's some good comments.
Yeah, there's a lot of networking going on in there.
A lot of networking going on, and that's one of the biggest things about this community is the networking. So the school community that I mentioned before is actually a great place to network as well. So I saw that. We got Eric here who lives in Wisconsin, pretty close though to the Twin Cities, just right across the river. Reached out to Brian to talk about some real estate deals, and Travis and Brian are connecting. And this is great, guys. So love to see that. That's what it's all about.
I'll add this too, and I think everyone on here probably finds this to be true is, and it was true for me. You need one connection, right? And I always think back to you, Dave. We go back to 2013, 2014, but that one connection, put me in this seat where I'm sitting today. So it really is amazing what can happen when you just spread those wings a little bit, and you meet the right person at the right event or whatever. Tell them what you do. They tell them what they do, and then it goes from there. And it really can be amazing. Not going to happen every time, but nothing's going to happen unless you get out there.
Yeah, you're right. From that deployment, my connection with you is the only connection I still maintain. But I mean, what a difference that's made in our lives and in the lives of a lot of other people. So,
yeah, and I'll share it with the community here. Between the two of us, Dave and I think we just eclipsed 600 million, probably 500 million, somewhere in there of total death benefit on the books.
Well, I think it's closer to 7 or 8, honestly.
Or maybe I'm way off. I guess I'm just being too conservative. But
yeah.
When you think about the amount of wealth transfer that's going to happen for those families now, and that's a snapshot in time. That's now. The policies are going to keep growing and growing and growing and growing. So, at some point it'll eclipse, $1 billion of wealth transfer that otherwise maybe still would have been transferred in another form, but not nearly as much, and not in the tax favored, advantage status that life insurance has.
Yeah, those are instant estates. All right, everybody. Well, hey, thanks for joining us. It's been great. Thanks for hanging with us at the beginning when we were hashing out the technical difficulties. Now we got it ironed out, so it'll be great next month. So stay tuned. We'll give you the dates for next month's live webinar. Probably same time, same day of the week, but we'll throw the date out to you. So keep listening to the podcast. Thanks for listening. Thanks for commenting, and look forward to talking to you all again soon. Paul, any closing words?
No, I appreciate everyone being here. I know it's, we always try to schedule these things at different times to see, how many people we can get to join. We do Saturdays, we've done Sundays, we've done Fridays. So, try to mix it up to capture as many people as we can. But thank you so much for being here. And, I've got an 8-hour drive that I'm about to embark on. So.
All right. Well, if anybody here who is not yet practicing the infinite banking concept in their lives, if you want to reach out to me and Paul, go to the wealthwarehousepodcast.com. You can find some resources there. You can click on a link to book a call with either one of us, whichever one you like more, or whichever one has a schedule that suits you better. Either way. And we'd be happy to talk to you, answer questions, and give you some guidance on the next steps. All right, everybody. Thanks for joining. We'll see you next month. Until then, control your capital.
Or somebody else will.